All right, you see them every single day. They're towering over highways, lining city streets. I mean, billboards are just part of the landscape. But while you're probably just seeing them as simple advertising, if you dig a little deeper, you find this really fascinating and super profitable truth.
So let me ask you a question. The next time you're driving and you see one of those massive things, what if you weren't just looking at an ad for, I don't know, a car dealership or some local restaurant? What if what you were really looking at was a piece of prime real estate?
Because it is. And that simple, kind of shocking fact, well, that's the key to unlocking this whole unique and really powerful business model. Okay, so let's dive into this first big idea. How in the world is a billboard, legally and financially, considered real estate?
So how can a billboard be real estate? Well, it all comes down to one key legal idea: permanence. See, real estate isn't just the dirt. It's any permanent structure that's attached to it. And that giant steel frame, the one anchored deep in the ground, yeah, that absolutely qualifies. And get this, even if a company doesn't own the land itself, they lock it down with these super long-term leases. We're talking for decades sometimes, which gives them total control over that valuable physical spot.
And because it's classified as real estate, these billboard companies can organize themselves as something called a REIT. That's a real estate investment trust. The easiest way to think about it is just a company whose whole business is owning property that makes money. Like an apartment building or an office tower, or, in this case, a whole portfolio of billboards. Now, this is where it gets really interesting for investors. So a company, let's say Lamar Advertising, owns all the billboards. Those assets generate a steady, recurring income from advertisers. And because it's a REIT, it is legally required to pass on at least 90% of its taxable income directly to shareholders. We're talking dividends. It's a structure that's basically designed from the ground up for massive, efficient cash flow.
All right, let's move on, because now we're going to see how this whole thing turns into an absolute cash flow machine.
Okay, so the most crucial thing to get here is the cost structure. Look, getting a billboard up and running in the first place is super expensive. That's your CapEx. You've got to secure the land lease, navigate this insane maze of permits, and then, actually build the thing. But, and this is the magic part, once it's built, the day-to-day costs, the OPEX, are remarkably low. It's pretty much just the lease payment, a tiny bit of maintenance, and the electricity bill. That's it.
There's this quote from our source material that just hits the nail on the head. It says, "The business becomes a toll booth for eyeballs." And that's perfect, right? Once that big initial investment is paid off, pretty much every dollar of ad revenue is almost pure profit. The billboard just sits there collecting money from advertisers who are desperate to get in front of that captive audience of drivers, just rolling by every single day.
Now, a business model this good, you'd think there would be competitors popping up everywhere, right? But that's where things get even more interesting. This whole industry is protected by these massive, massive barriers to entry that pretty much create a near monopoly for the big guys already in the game.
So barrier number one is just simple scarcity. I mean, think about it. There are only so many prime spots along high-traffic roads that have that perfect line of sight. You can't just stick a billboard anywhere you feel like it. And that scarcity, it's largely enforced by government regulation. There was this huge law, the Highway Beautification Act of 1965, that just slammed the brakes on building new billboards along major highways. What it did was it essentially grandfathered in all the signs that were already there. And just like that, the existing inventory became this finite, incredibly valuable resource. Trying to build a new one today in a lot of those prime areas, it's next to impossible.
And finally, you've got the barrier of pure scale. The big, established players, they have portfolios with thousands, sometimes hundreds of thousands of signs. They've already locked up all the best locations with those super long-term leases we talked about. For some new competitor to just waltz in and try to match that kind of scale, it's a monumental task. I mean, it's pretty much impossible.
So what you have is this century-old industry that's protected by these huge, powerful moats. But here's the thing. It's not just sitting still. It's innovating. And the key to all of that is a digital transformation.
Let's take a look at an industry leader, Lamar Advertising, as a great example. They operate a staggering, get this, around 360,000 advertising displays across the US and Canada. They're the ones who converted to a REIT back in 2014, and they have been leading the charge in upgrading their massive portfolio from those old static signs to new digital ones. And here is why that is such a game changer. A classic old-school billboard, it shows one ad, that's it. But a single digital billboard can rotate between 6 to 8 different ads every single minute.
Not only that, but advertisers can update their messages instantly. So what's the result? A massive jump in flexibility and, way more importantly, the amount of money you can make from a single pole just absolutely skyrockets.
Okay, so let's put this all together. What does this actually look like from an investor's point of view? Let's do a real quick rundown of the pros and cons.
All right, on the pro side, you've got that incredibly predictable and stable cash flow we've been talking about. You have those super high barriers to entry protecting the business. It's a fantastic hedge against inflation, and that REIT structure means you're looking at attractive, consistent dividends. And on top of all that, there's still huge growth potential as more and more of these signs get converted to digital.
But, of course, it's not all upside. There are definitely risks. For one, the business is tied to the overall ad market, right? So a big economic downturn could really hurt. There's always the looming risk of new regulations. And while the business model itself is rock solid, these companies often carry a lot of debt. And all those fancy digital upgrades, they cost a ton of money. So it's a balanced picture for sure.
So the next time you find yourself stuck in traffic, and you're just staring at one of those giant signs on the side of the road, I want you to ask yourself a new question. Are you just looking at an ad, or are you looking at a highly protected, cash-generating piece of prime real estate on a pole?